Hello, everyone. Welcome to this webinar today. This is on financial forecasting. And I'm joined by Paul Barnaby, the Managing Director of Beyond Accounting Technologies and the Accounting Industry Consultant and Australasian Manager for Plan Guru. Paul's going to be talking to you about the preparation of predictive accounting reports utilizing Plan Guru software in a short time. We have people watching this webinar on social media, so welcome. If you have any questions, you won't be able to access direct to me. Can you please send me an email, peter@essbiztools.com.au, and we will get back to you. What I want to open up with today is an overview of what financial forecasting package is all about. And this, no, I've done that. This, okay. This package, financial forecasting, comprises a number of components. First of all, it includes all of the material that's contained within ESS BIZTOOLS. But in particular, we're looking at a business plan for one of our clients. And then we're looking at predictive financial accounting reports, which comprises budgets, the key drivers, cash flow forecasts, and projected balance sheets. And that's what Paul Barnaby's going to be talking to you today about. What all this information enables accountants to be able to do is to be the storyteller for your clients. And Paul will expand on that a little bit later on. The next key component is the ESS BIZTOOLS package includes material to assist accountants to deliver a 52-week business enhancement system. I don't accept that preparing an annual set of accounts and tax returns gives your clients enough information to run their businesses, especially with all the problems that 2024 has already produced. And I think there's many more problems in front of us. In fact, a recent update from Australia's Security Investment Commission has indicated that business failures have increased by 34% already this financial year. Surely this presents a real challenge to the accounting and bookkeeping professions to look very closely at the services we're providing to clients. It's our belief that the 52-week business enhancement system, which is built around a daily report, weekly performance report and profitability estimate, and monthly financial accounts compared back to the budget and cash flow forecast, with a monthly meeting with the client and then repeating the process again the next month and so on during the year, is a far better service to help SME clients survive, because it's basically the same service that big business delivers to their individual business components, wherever they are. We also have Chief Financial Officer services, and obviously Paul's touching on some of the Chief Financial Officer services today, but they cover a wide range of activities of how your accounting firm can position itself in that role to be able to deliver those very important services to your clients. We have within ESS BIZTOOLS a whole range of spreadsheets and articles and forms to assist you in the delivery of that service. But one of the biggest roles as a CFO is to be the financial advisor to your client. Running a small business is very lonely. And you probably don't need me to tell you that, but just please reflect on it as we go into this webinar today. It's very lonely. I was the chief financial officer of a listed public company, and I was also the company secretary. I would have spent at least 2 hours a day, sometimes 10 hours a day, with the CEO going through a whole range of issues. Who does your client go to, your SME client, to discuss the real problems that they have in running their businesses, the financial implications, the corporate governance questions, a whole range of matters? Where's the finance going to come from the business? What's this business going to look like in 3-5 years' time? Because SME business operators have the same doubts, the same questions, the same queries that a CEO in a listed public company has. Yet the listed public company CEO is surrounded by experts. In our company, we had 10 in the leadership team. So there were other people with expertise in a range of other areas that I didn't really know much about, but I'd learned a bit about them. But who does your client go to? And this is one of the important roles that we envisage if you're supplying a virtual CFO service, that you will be accessible to your clients throughout the year, not just at the end of the year or maybe once a quarter when you're discussing financial performance. And the other issue that I'm going to finish on, and then Paul's going to start, is fiscal management. There was an article in the Financial Review about 8 weeks ago that was written by Paul Robson, who's the CEO of MYOB. And I think he highlighted a number of very important issues for those of us in the accounting profession advising SMEs to be thinking very seriously about. Because Robson said, on his analysis of business failures, most people start off with a great idea and a good concept and probably think they've got enough money to start a business. Yet after 6 months, they seem to hit a brick wall. What causes that brick wall? He's analysed that and decided that the brick wall is a lack of knowledge on fiscal management. He highlighted only 3 issues: not planning to have the funds available to pay GST when it came due, not anticipating the payment terms of suppliers. And I can imagine that a lot of suppliers, because of the business failure rates that are occurring at present, have probably tightened up on their credit facilities being made available, especially to new business operators or to someone that's acquired another business. And the third thing he concentrated on was new businesses giving credit to their customers, and did they have appropriate debtors management services and facilities in place. There's a lot more, of course, involved in fiscal management, but hopefully that gives you an introduction to the type of areas that we see that the financial forecasting package will help accountants and bookkeepers who are wanting to offer this higher level service to be able to do so. So I'm now going to invite Paul Barnaby, who is on the screen now, to join you and join us and commence to give us this overview. How are you today, Paul?
I'm really good, thank you, Peter. Have you given me
well, you're
access?
On our screen, so we can hear you. So I think you're
and
ready.
You can see my slide.
Yes.
Good. Okay. Well, Peter, this is officially a follow-up to the webinar we did earlier, and so I'm going to be probably repeating a little bit of that. But what I'm hearing from you, and what I'm hearing from people out there in the profession as well as ordinary business people, is you're absolutely right. There are changing conditions. There hasn't really been a pattern established since lockdown. We don't know what effect inflation is having, or whether in fact we've got inflation. It seems as though some advisors say one thing and some say another. But what we want to do, we being ESS BIZTOOLS BizTools and Beyond Accounting Technologies, we want to turn you into a hero with your client. And you do that by becoming a virtual CFO. So I'll just quickly go over some of the slides because I think it's germane to the discussion and any other questions that might arise today as to what is this process all about. And we can help you become a actually certified predictive accountant. We have those words trademarked and given a participation in the training course with appropriate assessment of the conclusion, we will turn you into a predictive accountant. So what is predictive accounting? Predictive accounting is nothing more or less than doing for future periods what we are trained to do for historic periods. In other words, revenue statements, balance sheets, but with a major difference. If we do that, we should be able to produce a cash flow, a projection. And all of these must be obviously in traditionally accepted reporting formats. And obviously we do this so that we can not only achieve the targets of the client or business owner, but this will highlight the areas where we can unlock greater profits, improve cash flow, look after making sure the bank manager is not on our back, etc., etc. And how do we do it? We use the key drivers of revenue, costs, and of course capital items, and then we translate these to the predicted financial statement. So just a quick little overview about me and what makes me passionate about predictive accounting. I am a chartered accountant, although I did, like Peter, have a senior role in a large company. It was the Revlon licensee actually in New Zealand. And then I, for 16 years, was managing partner of a second tier firm based in Wellington. But while I was there, I had what's called a light bulb moment, and I took a giant leap into virtual CFO services. And boy, was I pleased that I had done that. So since then, I've had 20 years of frontline experience looking after clients in the areas of predictive accounting, financial analysis, strategic planning, and of course, budgeting and forecasting. My practice is entitled Beyond Accounting Technologies, as Peter well knows, and as he mentioned, I am the regional integration consultant for Asia Pacific for Plan Guru, which is a company based in Pennsylvania in the US, and that's all they do is tools for predictive accounting. So I've helped many accountants hopefully look like superstars. So I just want to touch base again quickly on those services because I think they're germane to the discussion about just how do we look after this financial management, this statistical stuff that is historically been difficult. I will never ever forget the first time I did a decent budget for a client, and they were a trading importer and trader. And I did this magnificent budget on their profit and loss, and the bank was wanting it, and they were very keen for it. So I sent it down. I get a phone call from the bank manager, and he says, "Paul, that's great, the profit and loss. Where's the balance sheet? Where's the balance sheet and the cash flow?" And I went, "Oh, boy, how can I do that?" Well, of course I did it, but it was a major exercise. So is it a small step to go from that compliance that Peter's talking about to only doing your accounts once a year or once a quarter? Or is it a giant leap to take those CFO services? Well, it is a giant leap, but I'm going to say it's one that you can manage and one that you will be utterly delighted you've done if you in fact can take it all the way. How do we do it? Get rid of compliance and tax work. I don't mean out of your practice. I mean delegate it from your own everyday activity. What is the point of you taking your time or not being available to your clients by filling out government forms? Doesn't make any sense. Tell your clients what they're going to get. Make sure they know that you have the ability to be their trusted advisor. And the financial forecast, the financial management, make them compulsory. That's a very hard thing to do because what you've got to do is to say, look, if you don't want to have financial forecasts, then I'm sorry, I won't be able to help you because that is an integral part of the service that we provide. So if you don't want me to be your virtual CFO, then I'm sorry, you're talking to the wrong accounting firm. And that was a very, very hard thing to do. But what it does is it makes you ensure that you take time to make make known to yourself what makes your client's business work. Okay, so you've got to discover, quantify your client's goals. You've got to have the appropriate tools. You've got to involve your client with each step, and you've got to make sure you've got support underneath to help you when times getting busy. And you should make your data preparation automatic wherever possible. So what's the key content? The key content is a business plan, which of course includes those predictive accounting reports, the budgets, the cash flows, the budget and balance sheet, KPIs and dashboards. Do a monthly report. Meet monthly with your client at their premises. They absolutely love doing that. And on the other side of the coin, they hate coming to your office. Why? Because they feel out of their comfort zone. So if you're going to be their CFO and emulate the full-time one, then do it on their own premises. And make sure that once that monthly meeting has taken place, if you need to update the rolling forecast, then go ahead and do it. And then share reports again with your client. Okay, I'll just skim through that because we did it last week. My preference for the budgeting methodology is key driver. Zero-based has a place, but it's very time-consuming and therefore costly. And the traditional budgeting based on history, well, just throw it out the window. It's not even worth looking at. So you need this budget. What do? You reach for Excel, right? Wrong. Excel's a great tool, as is Google Sheets, but they were never built for predictive accounting. Sure, you've got them available in your practice. Sure, you will have done budget. But I'm going to say it's a hiding to nowhere. Because would you recommend Excel in place of Xero or MYOB or QuickBooks? No, of course you wouldn't. Then why do you use it or think about using it for predictive accounting? So I'm going to go straight from there now that I've sort of set the scene about what's needed. I'm going to go straight from there to a Plan Guru a demonstration, and it's a computer company that sells computer hardware, printers, software, and accessories. And Peter, by the way, if there are any questions that you've already got a note of, I'm happy to field them via you. If you are just happy to interrupt me at any stage, I'd be happy to stop and have a look at it.
Yeah, so I just might interrupt there, Paul. If any of our viewers have got questions, if you can type them into chat, I will then relay them to Paul. Thanks, Paul.
Yeah, great. Okay. So you can see here that we've got 3 tabs up the top. We've got budget, we've got actual, and we've got forecast. And if I just look at budget for a moment, you can see that they're expecting 3.5 million revenue for the year. And that's based 2.5 million in hardware sales, 500,000 in printers, and so on with printers, with software and accessories. So 3.5. How do I reach that sales target? I talk about key drivers. It is the absolutely fundamental to successful corporate CFO, virtual CFO, call it what you like. Unless you're looking at the drivers of your client, your company or your client's business, then it's not going to work for you. So if I have a look at the non-financial tab here, you can see here that we have projected unit sales for the various products that are sold. PCs, just the box.
Paul, we're not getting the share. I don't know what's going on here. We're not getting the.
Not getting the screen. Just hang on. I'll make sure I've shared my screen. Oh, sorry. You should have told me earlier. How's that?
Sorry, okay, that's it. Yeah.
Okay, so I'll just go back to Plan.
Yeah.
I'll just go back to Plan Guru, and in our computer case study that I'm looking at has budgeted their sales by units of the various products. Printers, both box only and computers, both box only and complete. Multifunction printers, laser printers, Microsoft software or other software. The list could go on, but these are the basics, and they have priced them accordingly. So that's the unit projection. But over here in the income statement, if I look at each line and drill down, I can see here that we are projecting our sales of PC box only based on those unit sales. And if we're looking at the budget, which we're not at the moment, oh yes, I'm actually doing a historic and forecast, so we've only got the remaining months to look at, but we're using a price of $500 to get that sales budget. I use drivers throughout Plan Guru. If I just go straight to the balance sheet now, and Peter mentioned supplier terms, a very critical one. You can see here that I'm budgeting on 45 days to pay for all trade payables. I'll come back on that topic in a few minutes. I just want to take you through how Plan Guru works. So we had a look at the revenue statement. If I just go back there momentarily, we can see that there's a sales budget of 3.5, cost of sales of 2.4, so a predicted gross profit of just under 1.1 million. There are the expenses, and we've got a net profit before tax, before interest and tax, sorry, of 390, before tax, just under 300, and so on. There's other drivers involved in the calculations here. So, for example, wages and salaries should be based on the schedule. Have a look here. Yes, it is. And there we go. We can see we've got a manager that we're budgeting on at 10K a month. We've got a salesperson who's actually got a percentage of their income based on a incentive scheme. So if I drill down and have a look for them, they're getting $2,500 a month, plus they're getting a percentage of total hardware sales. So I don't want to get too much into the detail. I just want to show you how this is all working. And then we go to the cash flow, and we can see here the cash flow split up into operating, financing, and investment, which is the internationally accepted format. And so you can see here that I've got a little bit of negative cash flow just in 1 month here, but the rest of it is pretty much positive. So just harking back to that issue that Peter raised of supplier, well, not only your own receivables, how you manage those, and it's very important that you do. So if I have a look at accounts receivable here, you can see that that's, I drill down, I can show you, that's based on an average collection of 70 days. 70 days, 2 and a bit months. I think it's a bit to my embarrassment as a member of the profession that Australia has one of the highest outstanding days for debtors in the world. Why is that so? Because we've allowed it to be so. And so therefore, when you're looking at your receivables collection and applying the strategies for your client to do that, you must try and improve on that 70 days. And Plan Guru will allow you. So if we think that by this month here, I can get it down to 45 days, then just by making that simple change and doing an update on Plan Guru, we'll have the result on our cash flow. So just back to that same topic, and we look at the other side of the ledger, and we look at accounts payable. So in my case here, I've based that on a 45-day. Now we've only got a few months remaining in this budget, so I'll just go back and I'll open up another version of it so that we make sure we're in the right place. So open. It'll take me a moment. Is this the right one? No, it's not. So apologies for that. I'll just open the right one. Right. Here we go. Okay. same numbers, just in a different file, and it's before I've actually applied the rolling forecast, because that's the key thing that I wanted to show you. So just remember what I've just shown you, that profit, gross profit of $1 million, net profit of about 300,000. But let's have a look at our cash flow there. And this was before we'd done the application of the strategic plan. So we can see that the cash at the end of the period here is negative 280, 350, 341. Why? Have a look at the balance sheet. Our inventory projection, our key driver again, was in here at 120 days. And that means that 120 days of cost of sales is our budget. And when we worked with the management of this particular company, they said, look, not so. And that's probably why that negative has arisen, because in the key months which we have, which are October and November and December, the stock level drops to about 90 days, because we're thankfully selling more than we're buying at the time. So let's have a look at what happens with that. See the negative cash flow up at the top here? It's transposed into the balance sheet automatically. If I apply that 90 days for 3 months, click OK, there's the cash flow, very nearly gone. It's down to 24,000 for November and 14,000 for December. And if we just maybe tweaked accounts receivable by about 5 days, by that for the full year, yes, thank you, click OK. There we go. The cash flow deficit has disappeared, and we're now starting to build a surplus. 12,000 in February, 90,000 March, April, May. By the time we get to the end of June, it's up to 120,000. So that's a very quick overview of how Plan Guru works. But just to come back to that example, we were running accounts payable at 45 days. Plan Guru will actually allow you to run multiple accounts, even though your financial statements may not record it that way, multiple accounts for multiple terms. So if you've got some suppliers on 7 days, in other words, you must pay them 7 days after they deliver the stock, then we can have a separate accounts payable line within Plan Guru. You might have another one where there's 14 or 21 days, and you might have the rest, which do fall into that average of 45 days. You'd obviously adjust your budget accordingly. Plan Guru will do that, and it will adjust your reports accordingly. So you don't have to have multiple lines in the balance sheet. You can have 3 or 4 or 5 lines at the varying payable dates, and then translate that to one total in the balance sheet. Try and do that in Excel. I defy anybody to do it. If you reckon you can do it and you ring me by 5 o'clock today, I'll give you a free copy of Plan Guru. Such is my faith, Peter. Such is my faith.
Very good.
Okay, so there we go. That's that very, very quick tour. I know I did it a little bit in the last workshop, but this one, giving us a little bit more time, has enabled me to go into a little bit more depth, but particularly that illustration of drivers, which is so important in the virtual CFO delivery, is what I wanted to touch on today. So there we go, Peter. If you've got any questions that have arisen out of that, by all means, flag those now. Otherwise, I'll hand back to you.
No, I haven't seen any come through, but if anyone watching this broadcast thinks of something later on, by all means, please send us an email, and we will get the answers back from Paul and share them with you. So just coming back to where we are, at the beginning, I was talking about the problems that Mr. Robson, the CEO of MYOB, had identified. I really believe that a more formal approach by accountants to the preparation of this sort of financial data will assist in identifying the information that's required to assist our clients to be able to undertake these processes. So just moving on the this financial forecasting package, which is quite extensive. We have a subscription offer at present. If you're interested in subscribing for this total package, it would cost $10,560, including GST. That includes a subscription to Plan Guru for 12 months that you can utilize for up to 10 of your clients at a time. The normal arrangement with Plan Guru is only to be able to access 3 clients at a time. You can access more, of course, but there's an increased fee payable. But the deal we've negotiated is you can utilize it for up to 10 clients at a time. That's $10,560 if you elect to pay up front, which is the cheapest option, or you could pay in 12 monthly payments of $1,056. The package comes with group training each month, or I'll repeat that, 10 times a year. We present, this is ESS BIZTOOLS presents a training package for our subscribers, and there is no additional subscriptions payable for that. If you wish, you can attend the other training packages. So in the year, we're presenting 40 training sessions. But if you're interested in something that we're looking at, that whilst it's available in the financial forecasting package, we might not have planned a webinar in the foreseeable future. So this could be, say, on a capital raising subject. You might be interested in understanding the early stage innovation company process, whereby a young company is able to raise capital, and there's an inducement built into the legislation for investors. Yeah, there's an inducement. In fact, the tax office pay this because the investors receive a tax rebate calculated at 20% of their investment, up to a maximum of $200,000 for a sophisticated investor and $10,000 for a retail investor. So if you are interested in attending that webinar, you could do so. Also, some of our subscribers like the opportunity to have one-on-one, one meaning their firm. Sometimes they got 30, 40 people in the room. And so that I can answer specific questions. And if you want to really drill down into Plan Guru, I would make arrangements for Paul to be available at that time so that we could answer your questions and enable your firm to deliver team training to your team. So that's available. That is an extra fee, and we will confirm that at the time. So if you're interested in subscribing to this package, please go to our website, www.essbiztools.com.au. Click onto packages and pricing, and then click onto the product package, which the one we've described to you today, of course, is financial forecasting. But if you are interested in going back down the steps, so within ESS BIZTOOLS, we have 3 previous steps by the time you get to financial forecasting. You don't have to start on step 1, but some people do start on step 3 and then move up to financial forecasting. Full details of what's available is available on our website. If you just click on to the packages, you can click on to whichever package you want. So the first one is advisory intro, which is basically aimed at being an introduction package to assist accountants who have not previously got involved in advisory services and are trying to work out where to start, and bookkeepers who are wanting to offer additional advisory services. We then go to the starter package, which is level number 2, which will give you a lot of material, especially if you're an accountancy firm starting off for the first time in advisory services. Then we go to the advanced package. The advanced package has all of the ESS BIZTOOLS materials included. And then we go into financial forecasting, which we've just described today, which is basically built around everything that we've got in the advanced package, together with the Plan Guru software package and the training and mentoring on how to use Plan Guru that's delivered by Paul Barnaby. And Paul briefly mentioned the Certified Predictive Accountant training that one person from a subscriber's firm is able to participate in. You can enroll more people, but we will detail to you the fee structure for that. So that's the overview of what we have got within the package. I'll just check. I can't see that anyone's asking us any questions. If you think of questions later on, please get back to us. Paul, thank you very much for your participation today. You're back on the screen, and
Yep.
have you got any further comments?
Thanks very much, Peter. No, my only comment would be, it's if you think you are ready to take that leap, by all means, give me a call or give Peter a call. It certainly was a huge success in my life, and it meant that I actually look forward to going to work each day. So it was a good change in my life, and the certified predictive accountant is, yes, it's part of the package, as Peter said. The consortium that we've put together, just briefly, of ESS BIZTOOLS, my company, Beyond Accounting Technologies, and Plan Guru, we've labelled the Academy of Certified Predictive Accountants, and that's where you get that qualification from. Part of the ESS BIZTOOLS package is attendance at that training that Peter was just talking about. But I just thought I'd mention that link, and that's how we get the rights to using the letters CPA and not standing for whatever they stand for, because it's multiple uses of that word around the world, from certified practicing to certified public to I don't know what. But that's how we get the rights to use certified predictive accountant. So I thought I'd just wrap up on that, because yes, this is something that you should seriously consider.
Okay, thank you very much, Paul. And I just want to, if you need any more information, can you please contact us? You can send me an email, peter@essbiztools.com.au, or you can make a phone call, 07 4724 1118. We're quite happy to deliver a one-on-one Zoom meeting, goes for about 40 minutes, to take you and your colleagues through the product packages and what's on offer from ESS BIZTOOLS in conjunction with Plan Guru and Beyond Accounting Technologies, if you're interested in the financial forecasting package. We look forward to be able to supply your firm with an outstanding range of advisory services to assist your firm to value add with advisory services to your SME clients. And there's a great benefit for your SME clients out of this, but there's also a significant benefit to your accounting talent. Every accountant I talked to in Australia over the last 18 months, and probably even longer, has been asking me, can I help find staff? It's very difficult. And we believe that by offering advanced advisory services to your clients, you will encourage your accounting talent to remain with your firm and, in fact, to be ambassadors for your firm, to attract other people who are interested in having a variety of workflow on their desk, not just taxation all of the time. So it's over to you. Thank you for being with us today. And as I said before, if you would like further information, please contact us. Thank you and have a great day. Goodbye. Thanks, Paul. Talk to you later.
Thanks, Peter. See you later.
And we look forward to hearing from everyone. Thank you. And I'll just stop the recording. Thanks, Paul.
Peter, a couple of observations on your slides, if I may. The very first slide that's got the big letters on it, no, it doesn't look right. It's gone off to the right.
Oh, okay. Oh,
If you have a look at that, I'll show you what I mean. And
yeah.
that if you just show your screen and give me a look at that, I'll show you what I mean. And also, there's a error on the footer,
On the
which
what?
you on the footer,
Oh, okay.
which you might like to correct.
Okay. Well,
If you show me the slides, I'll point out what I'm talking about. Sorry to sound like a critic, but it'll be
that's all right.
helpful for
But I
future
don't know
stuff.
whether I can get them back up again now. I've turned it all off. I've turned it all.
Well, where it says financial forecasting package,
Yeah.
you can't see half the letters. It's all off to the right. It
Oh, okay. Can't see.
doesn't
Okay.
it doesn't look right. And then on the footer, the letter F is
Oh, that's
missing.
missing. Yeah.
Yeah.
Okay. Righto. I'll get that. Okay.
So
Sorry about that.
too late
Okay.
for this one, but I
Yeah.
thought I'd let you know so you can fix it for next time. All right.
Okay. Thanks, mate. I'll talk to you later.
Okay.
Thank
See
you.
you
Bye.
later. Cheers.